Good morning, everybody. Welcome to What's Hot on the Open, and it is hot here at MarketStream.live. We're going to take a look at all the action. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. Let's jump in. Lower non-farm payrolls, 98,000 jobs. Lowest that we've seen, I don't know, I can't even remember the last time, over a year. We see the average hourly wage lower than expected, only up 0.2%. We see the average work week lower than expected, 34.3 hours a week. Bombing in Syria. And the fact of the matter is we have absolutely zero Trump policies that have been put into motion. This explains this to a degree. I don't know. I'm starting to question. The bulls either are that strong or there is something that I am just completely missing at this stage. But with the desensitization of the market, this is an excellent time to basically tell those that are on the sidelines and have anxiety about being on the sidelines, I wouldn't have that anxiety. If anything, what you need to do is strategize very prudently about deploying capital in this environment because of the fact that we're not seeing the things that you normally would see or expect, which is that's why markets are random. So let's jump in and take a look, try to give some more transparency. Let's set some tones here. And the first one is that the battle continues. The Dow Jones trading down now 22 at 20,639. It's been a very tight range all morning, post all of that information that has been deployed into the market at this juncture. The same action you'll see in the S&P 500. Again, we're seeing that the 20-day moving average on these two large cap indices continues to be now resistance. The NASDAQ is now challenging its 20-day moving average down 10 at 54.09, but it's still the most bullish of the large cap indices. And we see that the Russell 2000 continues to lag the market in general. It is down 3 points, 0.25%. But why I say lag is that there is absolutely no conviction on the shorter intermediate term bulls. But the bears also are not sinking their teeth into anything at this juncture, despite the fact that we saw that the economic data this morning came out and disappointed. Now, I don't think a snowstorm is basically stopping the hiring of over almost 90,000 people, because on average we've seen non-farm payrolls come in at around 170 to 180,000. Came in this morning at 98. So I look at this, I scratch my head, but what it means is that I have to be extremely prudent on deploying investment capital at this juncture. Volatility just spiked. As a matter of fact, we've seen volatility in probably if you put this on a 15-minute chart, basically in the last 15 minutes, you've seen volatility go from 12:30 to 13:20. In 15 minutes. And now it's coming off of its highest levels of 1340, but you see that volatility is starting to enter the market. We're not seeing it represented in action yet, but vol is moving, and typically implied volatility and market movements, they're non-correlated. So the bulls nor the bears are taking any major action as far as price action, but we're starting to see the expectation of potential violent moves increasing on a short-term basis right now. You want to keep an eye on that for the rest of the day. Taking a look at the dollar was hit overnight when it was announced that there was a missile strike in Syria in reaction to the Syrians using chemical weapons. And so the markets right now have firmed up on the dollar side. You did see some what we call safety currencies like the yen get a slight bid, which puts some pressure early in the Japanese markets. We talked about that in the overnight session report for Asia. But the dollar strength is continuing this morning. So we'll see if that actually is a catalyst for the bulls here in the States. Crude oil did bounce as well. It got as high as tagging $53. That was basically in response to the missile attack. It is subsequently pulled off, is now trading right off of its worst levels and right at that 20-day moving average, as you can see here on the chart. Crude oil, again, while the missile attack was an emotional move, at this juncture, you're going to want to watch. You're going to actually want to watch the Brent contract at this juncture. That has held up at the $54 mark. That's the one that would be most affected. The Brent contract would be most affected by any type of disruption in the Middle East if tensions do increase as well. What's also notable is that the bonds continue to move to the upside, which is absolutely amazing when you think what the Fed came out with as far as with their meetings, meeting notes that came out earlier this week. Bonds have been holding their bid, as you can see from the chart. I'm actually going to bring it up here. You can clearly see that the 2-year is up today on price. That means their yields are dropping. You saw the 10-year. 10-year has just been trending to the upside for the last couple of weeks. And you've seen that the yield in the 10 years come down from 260 back here to basically now in that 230 level. You're also seeing the 30-year continuing to move up in price. When you see bond prices moving up like this, folks, that's telling you that yields are going down. That means that there is still uncertainty on what the next leg of this market's going to be. And as you can tell, I'm looking for some sort of potential pullback correction, but that correction is not where I think there's going to be a notable trend shift, not unless you start seeing, and that's why I use these moving averages for context, but not bias. And it just gives me some context. So if I see the 20 and the 50-day moving averages being violated, if the market's been trading above those and now they're trading below, that's telling me that I need to look at the thesis right now of the overall marketplace. And then I'll use implied volatility as starting to use it as a determinant on what type of strategy I'm going to deploy now that I could see the market environment either shifting or I see an opportunity based on the fact that I still have my core thesis, whether I'm bullish or bearish. So right now you're seeing that the markets are just grinding, and I think that's going to be the action that you're going to see for most of the day until we either get some sort of clarity or focus on what's going to continue to happen in Syria. That is going to be a volatile situation. The Russians and the United States, we still have the president meeting. President Trump is still meeting with President Xi from China. So again, a lot of headline risk at this juncture. There's a lot of geopolitical risk at this juncture. Volatility has been moving, but not unusually high by any means at 1280, but we're going to keep an eye on that. Join us at 1:30 Eastern Time. We're going to cover some of those strategies that you can look to deploy in an environment like what we're in at this juncture. So we'll see you at 1:30 Eastern Time here at MarketStream.live. Have a great day.